In today's video, I'm going to be talking to you about how you can invest like a millionaire or even like a billionaire. Now, I'm getting close to that millionaire status because of what my business is worth. However, I am by no means a perfect investor. However, today I'm going to be breaking down a lot of the tips and tricks as to what Kevin O'Leary, Warren Buffett, and many of the others really talk about. Now, let's get down and let's really check this out. What is a key part of a millionaire's portfolio? Well, of course, there's going to be people like Elon Musk, as well as myself and many others who run businesses who, of course, have a majority of their net worth wrapped up in their business. Now, their business obviously brings them money and an income, so of course, that is obviously a good factor. However, if you don't run your own business, a good way is to be diversified. That is a big key factor. Being diversified is going to allow you to basically withstand a lot of the ups and downs. I'm going to give you a very good example right now. I'm going to give you an example of Canadian Natural Resources. This is an oil company, and from there we can see that over the past month or so, the actual stock price has been increasing while most of the stock market has been decreasing. Of course, most of the reason behind the decrease is, of course, because of companies like Google. They have been decreasing, and of course, they've recently, over the past few days, have returned a lot of their price back into their stock. However, we can still see that they are below that amount that they were at back in December versus Canadian Natural Resources, which is well above that limit that they were at back in that same time period. We can see that this is, of course, December, and they have increased their stock price dramatically since that time. So by being diversified, it could help limit your downside, but also it could also limit your upside, which is why I like dividend stocks myself. Dividend stocks is going to allow me and many others to be able to withstand the ups and downs of the market because it basically pays us to own the stock while the stock market is doing whatever it is that it's doing. So that will allow you to have at least some kind of income. So for those like myself who are self-employed, a fantastic option is to be able to invest in dividend stocks because let's say, for example, let's say a virus hits like it recently did. And let's say you were in one of those sectors that got hit by that virus. Well, while that whole thing was going on, the stock market was still paying dividends if you had a strong company. Of course, if you owned an oil company, oil stock prices did plummet, and there were some companies that, for example, Imperial, that continued their dividend while others did lose their dividend, while companies like the banks of Canada, the big six banks, CIBC, TD, National Bank, those banks did extremely well. Of course, their stock price did plummet for about a couple of weeks, and then they've done extremely well since. However, throughout that time, they didn't stop their dividend, but they stopped increases to their dividend until recently, where some of them raised their dividend by as high as 25%, which is huge. And even during that same period of time as I showed you with Google, we can still see that the banks did increase their price. They have had a little bit of pressure over the past couple of weeks, or couple of days really, but since then, it will be continuing to go up. The day of recording this video, it is down, however, if we look back to December, it has raised its price from $150 to now $163. That is absolutely amazing considering the market hasn't been having that great of a time right now. But going along with the whole idea of investments that pay you, there's some fantastic options like the Canadian banks that I personally prefer. For example, it's very liquid. You can get in and out. Couple of million shares traded per day is extremely easy to get in and out of. Right now, if you invested in it, it is a 3.9% dividend. And I'm going to give you another example really, and that is housing. So, for example, there's people like Grant Cardone and many others who will insist that you should be going out and over-leveraging yourself, buying more and more homes so that you can rent them out. Well, if you really think about it, and if you actually do the math, if you are getting a mortgage for a house so that you can rent it out, and then you can bring in, let's say from around here where I live, you'd be looking at around $2,500 to $3,000 a month just to live in a house when you're renting. And if that's the case, then what's that mortgage actually going to look like? Well, the mortgage for around here, you would be looking at around $2,000 to $2,200 a month if you put around 10 to 15% down. At that point, you're basically only going to be profiting around $800 a month, which may sound fantastic, but now you also need to have an emergency fund, which we should all be having anyways as individuals, but you never know when a furnace is going to break, when a water heater is going to break, if there's going to be a flood, if there's going to be your roof flying off from a windstorm, or maybe it's just old and you need to replace it. There's things that happen to a house that you need to continue to maintain. Maybe you have a bad tenant and they ripped all of your wires out. Whatever it may be, you need to put money up in front to be able to fix it before another tenant comes in, or if there's just random things that break. And if that's the case, you're not looking at $800 a month. You would be wanting to put at least $500 of that dollars, or $500 of those dollars away as an emergency fund every single year, which would be around $6,000 a year in that case. And at that point, you should be able to maintain the house, pay property taxes out of that amount, and you should be pretty well fine. So while you have invested a lot of money into that house, you're really only getting paid $300 to $200 to $300 a month, which to me doesn't seem like it's worth it if you are putting up front around here $800,000, $900,000 houses. So if that's the case, because the average house price in Hamilton is now $1 million, which is just blows my mind considering this house was purchased many years ago at $100,000. But either way, it doesn't make any sense. The housing market's crazy. However, when it comes down to it, I would rather invest in the stock market, because it still pays you, and it pays you about the same amount for the same amount of money that you invested. It will still increase its value by usually around 5 to 12% a year, depending on the stocks that you're looking at, if they're blue chip stocks. And if you're looking at a house, minus what's going on right now, because house prices in Hamilton are going up by 35% every single year, taking that out of the equation, the average over history of house price increases is between 8 and 12% as well. So really, when it comes down to it, the stock market is a better option in my opinion. Now, of course, everyone's opinion is different. However, when you're looking at a stock market, you can say tomorrow that you want to sell it. While with a house, you can say tomorrow you can sell it, but you probably will have to wait 10, 15, 20, 30 days. The average sales day or time to sell in Hamilton is currently around 15 or 16 days from the last time I read about it, maybe 18 days, somewhere around there, where usually is around 2 months in history. So you can get in and out and get your money fast on the stock market, while you can't with houses. Now, I'm not saying houses as a rental property is a bad idea. Many people like them. However, it's just not personally for me, and of course, you should also be comfortable in what you are investing in. That is another massive tip. Have to invest in what you are interested in. I have invested in CNQ before when I was starting off as an investor. I can't keep up with it. I hate how oil prices fluctuate, and it's out of really my control. While with a bank, it's still out of my control, but I understand it a lot better. I understand what they're doing to make money. Don't really totally understand how much money that they're upfront paying to mine the oil to be then selling it. That is just too much in-depth knowledge that I do not have of that industry, so I do not invest in that industry directly. I obviously hold it in ETFs, but that's somebody else handling it, not me. So always be comfortable with what you're actually investing in. I like tech, I like dividends, that is my thing. I love Tesla, I love it. I don't own one, but I own a Mustang. But either way, get what I'm trying to say? I hope that you do. And then, of course, my last point is to have an emergency fund. You should have at least 3 months of money, because obviously the average downturn of a stock market is usually, you're looking at, on average, 9 to 18 months. That's usually 3/4 to 1.5 years. If you have 3 months, then at least you have the ability to have a 3-month supply of money while you're looking for a job, or you have 3 months of money to be able to start something for yourself. Either way, you would have a safety net, and it should be held, in my opinion, cash. But of course, there's options for Bitcoin. You can get into that. those fluctuate too, and Bitcoin does seem to be a little bit more of a hedge on gold, or at least hedge on economy or whatever it may be. I own a very little bit of Bitcoin. It's just something that I like. I own it directly, also indirectly through ETFs, as well as through ETFs that run a covered call strategy against it, so I can get 16%, and I think it's closer to 18% dividends. Either way, still a fantastic option. This is how the millionaires will invest. They'll invest in themselves. They'll invest basically diversified across multiple different sectors. They will also obviously have a lot of money held up in, or at least value held up in their businesses that they may run if they own or run a business. They may also have a lot of money held up in houses, whether they rent them out or own them themselves. I hope that this video has helped you. If it has, hit that like button, subscribe, and I'll see you guys again next time.